As we approach the end of the fiscal year, there are several triggers that could have an impact on your portfolio. The government has cut interest rates on small savings schemes. A rate cut from the RBI is likely. Equity markets continue to remain volatile. And of course, many of you are probably in the process of last-minute tax planning. To talk about all of this and how to strategize your investments, joining me in the studio is Abhijit Bhave, CEO, Karvy Pvt. Thanks very much, Abhijit, for joining me on the show.
Thank you so much for inviting me.
Okay, let me start by asking you, we've seen the markets be extremely volatile in the last year and a half. We've seen some amount of up move ever since the budget happened. But essentially, what is your advice for investors at this point in time? How do you strategize your equity investments? Is it time to sort of top up equities?
So my view remains very bullish. With a 1-year view, 3-year view, 5-year view, 10-year view, I think these are great times to be in the equity market.
Okay.
So if you're not in the market, go in the market, be systematic, use your SIPs to put in the money. But market ups and downs in the short term should not be coming in the way of a long-term investor.
So do you think this is the time to sort of put in a lump sum into the equity markets, even if you have a continuous SIP going or anything?
So if you have a 3-year view, things look very good to put a lump sum. If you have a 1-year view, you should actually possibly tranche it, wait for a correction if you want to be slightly greedy.
Okay. So what would you say should be one's allocation between equity and debt at this point?
Okay, so that's a $1 million question, because that is the key question for any investor, and that is a function of your risk profiling, asset allocation. Right. Very clearly at Karvy Pvt Wealth, we are equity overweight.
Okay.
So if somebody is 70-30, one should be 75-25.
Okay.
And one should go with the age-old guideline of equity is equal to 100 minus the age. Okay. So as you keep on getting older, keep on cutting your equity exposure.
Okay. And what is your view on the debt side in terms of one's debt portfolio? Because as I was saying, we're expecting a rate cut coming in next month. We've seen the small savings rates as well being cut. How should one really rebalance their debt portfolio?
So the simple short answer is add duration.
Okay.
So one is expecting rate cuts now for the next 18 to 24 months. One goes for the long-term paper, take a long-term debt fund, take possibly a gilt fund, go for tax-free bonds. In terms of the small savings, I don't think people have much of a choice. People can possibly look at slightly different products like a fixed maturity plan, or they can look at adding some risk to the portfolio and have some equity through a MIP or through a balance fund.
Okay. Okay. Let me ask you about gold. Gold was really not doing much for quite some time, and now somehow it seems to be regaining shine. What should be one's allocation towards gold? What's the outlook on gold?
So Indians love gold, but I have always maintained that gold should be a hedge in the portfolio. When there is gloom and doom, gold goes up. Gold is a hedge against inflation, so it is something that you need to have in the portfolio. With the US interest rates going up, India interest rates going down, one would expect the Indian gold prices to go up, but not more than 10%.
Okay. We're at the end of March, so a lot of people must be scuttling about trying to do their last-minute tax planning. What are the kind of instruments today, and what should, any tips for last-minute tax planning, really?
So, the tax planning should start in the month of April.
Ideally,
so I should give tips for the next year's tax planning.
Yes,
But if you don't have time today, a simple answer for Section 80C is take an equity-linked savings plan. If you already have a PPF account at top of the PPF, if you don't have a term plan or you don't have enough term cover, take a term plan. If you don't have enough medical cover for self, for parents, take that. I have myself tried it. It's too late to open an NPS account now.
Okay, all right. In fact, interestingly, what is your view on the NPS now, ever since, we saw the whole EPF versus NPS and all of that. But as of now, what is your view on the NPS?
See, I am very clear that if somebody is in the top tax bracket and say a salaried person, he can't really save more tax.
Okay.
So anything new coming up, I think it is a must do. There are 3 advantages. One is you're straight away getting a 33% tax saving because if one is in top tax bracket. It's compulsory saving and it's long-term portfolio creation for your retirement. So I think that's a clear yes answer.
Okay, Abhijit, let's talk a little bit more about equities. Where are you really seeing value in the market today across sectors?
So now if you look at something called a Shiller price to earning ratio, which is a very, very good jargon to use, it's value everywhere. but there is more value in large caps. There is also clearly more value in what you call interest rate sensitives and what you call consumer discretionary portfolios.
Okay.
So if you expect interest rates to go down, buy private sector banks, you can buy housing finance companies. Because there's going to be a lot of money coming in the economy because of one rank, one pension, and because of the pay commission. One should look at buying auto companies, one should look at buying consumer durable companies.
Okay.
Simple.
Okay, all right. So as far as the banking space is concerned, do you think, I mean, PSU banks are beaten down so badly, do you think there's value there at all, or
Very,
still too
very
early?
selectively,
Okay.
there's value there.
Okay, okay.
We can't give you stock calls, but
Yeah.
I think very selectively there's some value there because the valuations are so low. And if one takes a 3-year view, I think you can get a good multi-bagger there.
Okay. Where else are you seeing, you know, this really mispriced stocks in the market today, you know, because even the metal space, you've got the commodities, entire commodity space really. Anywhere there you're seeing something?
So mispricing is there everywhere. You know, after the budget, when the market touched a low on the budget day, the market has gone up 11%. But in the last 12 months, the market has gone down 5%.
Right.
And in this calendar year, Brazil has gone up 30%. So there's value everywhere.
And within the mutual fund space, you know, what would you really recommend for investors? You know, so you have sectoral funds, you've got these new equity savings funds that give you a hedge, an arbitrage on equity as well. And you've got, of course, your diversified equity. But how should you sort of...
So I am a great believer in keeping equity separate, debt separate. Having said that, we have seen a lot of customer appetite coming back to balanced funds.
Okay.
So that's a good allocation if you don't have one, because you get the best of both worlds. If the markets go down, your portfolio doesn't go down. If the markets go up, you have the returns coming your way.
So what are you really seeing on ground at this point, you know, as far as your clients, investors are concerned? Are you seeing any sort of fear at all, any kind of, you know, redemption pressure in terms of investors wanting to pull out of equities?
There's optimism.
Okay.
And people are saying that we will make money in the next few years.
Because we have seen a slowdown, significant slowdown as far as
so mutual funds have gone down to a 21 month
Exactly.
low. But in our business, we talk to HNIs, and HNIs are smart cookies, right?
Right.
So they are very bullish, and they are putting their money. One more place where money is going is tax-free bonds. So a lot of HNIs are putting a lot of money in tax-free bonds, and that is again an interest rate play.
Any, you know, among the HNIs, is there appetite for the IPO market at all? Because we're seeing IPOs come out, but what is the HNI appetite for that?
Again, you know, a lot of HNIs, what they do is they use the IPO market as an allocation. So if they see value in a particular stock, they go for that. But that can't be said for every IPO.
Okay. Yeah. True. So, you know, at Karvy Wealth, what is it that you are advising your clients at this point in terms of how should they be approaching their investments?
So again, asset allocation, and in Karvy Pvt Wealth, for the HNI space, we look at portfolio management services, PMS, we look at alternative investments, private equity funds, real estate funds, and people are also looking at high yield debt. Surprisingly and not surprisingly, both, some of our customers are going back into real estate and looking at rental yield funds.
Okay.
But the opportunities are there, and people are taking their picks based on what they believe will work for them. What we are clearly saying is it is a good time to make money in equity as well as debt.
Okay.
And you take your pick as per your risk profile.
Right. But are you seeing that interest coming in property again?
Not direct property and not in the short term. We expect that to take time.
Okay, so it's more real estate funds.
Yes, and rental yield funds.
Right. So, you know, in the alternative investment space, what is the kind of, you know, especially since we're seeing the markets being so volatile, what is the kind of appetite among the HNIs?
So HNIs are looking at allocations of 10 to 15%. Where they're putting the money for the next 5 years, and they have a reasonable expectation on the returns, which is not more than, say, 14 to 15% post-tax in their hands. And they're looking at both real estate private equity funds and non-real estate private equity funds. There are customers who are also putting their money in venture capital funds.
Okay. And what about, you know, the startup space? Because some time back we were seeing a lot of HNI interest in the startup space, and then now this whole thing about the startup bubble and evaluations possibly not being at the right
So
value.
a startup investment excites customers. So in fact, today I met somebody who's an entrepreneur who's going into getting going public. So that would remain, but very selective.
Okay.
And typically you will meet customers who will invest in one or two companies because they actually feel very excited being part of of evolution of a person, or a unicorn movement, as they say, right?
All right, Abhijit, we'll leave it there. Thanks very much for joining.
Thank you so much. Yeah.
All right, time for a quick break. We'll come back and talk about Ambit's new PMS scheme on the other side. Stay tuned.